Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for October 11th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. It's been a very quiet market. We've talked about this before. I have not offered any insight with regards to directional swing trades in a very long time because this type of market here is something you stay away from. Well, once we got this move here, we were expecting perhaps some pushback up to the midpoint, but other than that, really, it's been very difficult in here to maneuver. So the intraday moves have been pretty decent, though. The intraday moves have had great trading range boundaries to get in on an intraday basis, sometimes back and forth in a single day. But right now, we're really just coiling up still, and this could continue to happen until we have the election. So another 4 weeks or so. Now, one thing to keep in mind is we also have FOMC minutes. The meeting minutes are going to be coming out tomorrow, so we could still have something to look forward to tomorrow heading into that report, but it could be very, very quiet the rest of the week within this range. You have to be patient. You have to fade the edges. 21.35 right now. 21.60.72 is a big time level up there, but right now the upper 60s are anywhere in the 60 to 63 zone has been offered right now. So a lot of back and forth. Eventually we'll see some expansion, but right now you just have to be patient, kind of stay away. On the intraday time frame, you see right here, the previous session had a nice trend move up that was all mostly pre-market, and then we went sideways. Once we started to go sideways in a bracketed 2.5 point range, we knew immediately it was not a day to really engage. So, this thing, once it pulled back, it offered a nice opportunity to get in a little bounce, but really, there's nothing there here. And right now, what we have today is the previous session's close immediately offered, and now we've pushed downward below the pivot range. We're chopping around 1 and 5 day VPOC, and we're basically going back into the previous session's range. The previous week's close is 21.46.5. So if you can't make it beyond the previous week's high price here, then you're likely retesting the previous close. Right now we have a clear trading range again down to 21.35s. In that area, 21.35 is FOMC level. You have 21.38 to 21.40 as being support. So right now, again, if prices cannot get back above 58.5, which is the key pivot right now, tried to hold and failed. Right now rotations into that area could be defended for a shot at seeing a push back toward 21.40. Above 21.58.5 opens up a retest of highs, and again 21.72 would be the next key level above. Okay, let's take a look now at crude oil. Here's a look at crude. Let's pop up the daily time frame. I like to put up let's not delete anything. Let's bring up the PivotBoss pivots here on a weekly. Pivots, what I like to do here is just basically look to see how price is responding at the edges of a price range. That's always very, very important. Once you get to new highs or new lows beyond a previous range, that's where things get interesting, because you're either going to see rejection and fade back into the range back toward value, or you're going to see acceptance and you're going to see significant range expansion and price discovery. So that's why it's very important to understand where the key range highs and lows are. 51.67 is the next key level above. What we have here is price getting an outside buy day yesterday, and now prices are holding above the previous 2-day highs. That's the previous week's high right now coming in as support. And so right now you can see bulls are trying to keep 50.5 bid for a shot at seeing expansion through 51.67. Bears are going to look to trap any push above 21.67, perhaps in the 52s, for a shot at returning this thing to value. So right now we're at a key point here. We may see more digestion between 50.5 and 51.70 until something significant does occur, but eventually we will be testing higher to see what the 51.67s are made of and beyond. Let's take a look here at the intraday time frame. Here's the intraday. What I mentioned to our trading room yesterday was, after you see such a significant trending move, typically speaking, once you find a high, and I mentioned that this lower high could have been it, you'd likely see some sort of trading range activity define itself. And I mentioned as low as 50.70, you probably see a range develop. And yesterday we didn't quite get that low. We got into about 50.95. But since then, 2-day trading range has taken us right into 50.64. So basically we've gone and traded right in that range after that trending move up. And now we formed a nice D-shaped distribution up here. We have a clear LVN. The LVN on a 5-day basis is 50.65. That's a very important level. The intraday LVN is 50.80. And right now, that's a zone here to keep in mind, because if you break back below this area, it's going to imply a move to 50. So right now, I think bulls want to keep this area bid and keep the range between 50.70, especially 50.5. That's the key level. So 50.5 to 50.70, that's a key zone of support. And then bulls want to keep that area bid and keep it above 50.5. Doing so will imply a continuation higher toward that 51.67 and attempt to push levels through 52s. So ultimately, above 51.67 here, this is where you start to watch for signs of weakness, rejection, or acceptance. All right, let's take a look here at gold. Here's the gold market. Let's take a look at the daily chart. Here we go. What I mentioned before was we've been in a downtrending move, and we basically want to defend pullbacks for a continuation perhaps into 12.0830. Right now you can see that here's the key range that we used before, and eventually we got a break down below it. It was absorbed right at it. It pushed through the bottom, went to 50% expansion and pushed through it. The next day held 50% expansion, then it hit the 100% expansion and closed. So we've done all of that, all based off of this one key range, okay? Additionally, you add on top of that this key range back here that we've had for a while. This is the Brexit news right here. This is the midpoint. It gave up the midpoint again, dropped all the way down. That's the 25% inner level, which coincides with the 50% here. And then it continued downward into the edge of the range, which is here. So we had two key range that coincided with each other. And on this day, we dropped down and we hit 1245. And then we bounced back above the bottom of that key range right here. So you now see that an absorption signature is beginning to form right here. And 1252s is very important. Bulls want to keep 1252s bid, and if they can, watch for a push beyond 1268. That could trigger a nice bounce back toward 1290, maybe even as high as 1306. So that's going to be very important to watch. If there's any failure to hold 1252s, I think that sparks a move likely into 120830. So right now bears are defending 1268s, lower highs day over day. They're trying to run the stops through 1252s. Bulls are trying to keep this area bid, 1250, 1251, 1252, for a shot at seeing a return back up. So right now, just keep that 52, an eye on that level, because it's a very important level here based on our key range analysis. Okay, let's take a look now at the the NQ. Here it is. Here's the NQ. Basically, prices continue to hold at highs. Every pullback, no matter how steep, gets bought big time to new highs. And we continue to hold near these highs. Even over the last month of trading, we've been generally at these highs. And now we pushed to new highs yet again and reached 49.01 half yesterday is the high of the week. Now we have an inside day developing, the previous day's mid, which is also the previous 2-day highs. That's holding as support. So you see where bulls and bears are positioned. Bulls are trying to keep 48.80 bid. Remember, 48.83 to 48.85 was resistance. Well, we now pushed through it, so now it's got to become support for bulls to get further success and a push higher. So that's going to be the key level to watch, 48.80. Bulls want to keep it bid for a shot at seeing a continuation up into 49.14 and beyond. Failure to hold 48.80 opens up a return back to 48.40 very, very quickly. So that is basically the lower time frame strategy as well. So if we drop down into the intraday time frame right now, here's 48.80. It's right there. That's an important level right now. that zone is very important to the higher time frame because it was a prior area of resistance. So if we bring this thing all the way back, you can see how many times, here's 48.80, every time price got into that zone or above it, it was offered. And now it pushed through it here and came back, and now it's defending because bulls want to keep its support bid. So right now that's going to be bid a little while, but if it gives up, you have a shot to see that 48.40 right here. So that's what I'm thinking right here, is that either bulls are going to defend 48.80 and bring it up, and bears are going to defend 4900, and now we have a 20-point range for a little while. Or we're going to see a breakdown or push out of that range. So keep an eye on 48.80. That's the key pivot today. And the previous day's close right now currently offered. So that tells you right now that bears are positioned there with stops above 48.95. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.